As the use of cryptocurrency becomes more widespread, it's important to understand the tax implications of owning and trading these digital assets. Although the IRS treats cryptocurrency as property for tax purposes, there are still several ways to pay taxes on your crypto earnings. In this video, we'll take a look at how you can pay taxes on crypto. Number 6. Calculate and report your capital gains. If you bought cryptocurrency and later sold it for a profit, you need to report the capital gains on your tax return. To do this, you'll need to calculate the difference between the purchase price and the selling price of your cryptocurrency. If you held a cryptocurrency for less than a year before selling it, the gains will be considered short-term capital gains and taxed at your regular income tax rate. If you held cryptocurrency for more than a year before selling it, the gains will be considered long-term capital gains and taxed at a lower rate. To report your capital gains on your tax return, you'll need to use IRS Form 8949 and Schedule D. You'll also need to provide the IRS with the date you bought and sold a cryptocurrency, the amount you sold it for, and the amount you paid for it. Number 5. Use a crypto tax service. If you're not comfortable calculating your capital gains or simply don't have the time to do it, you can use a crypto tax service to do it for you. These services use software to automatically calculate your gains and losses based on your transaction history. Some popular crypto tax services include coin tracking, CryptoTrader.tax, and TaxBit. Using a crypto tax service can save you time and hassle, but it will also cost you money. Prices for these services vary depending on the complexity of your transaction history, but they typically range from $50 to $500. Number 4. Pay taxes on crypto income. If you receive cryptocurrency as payment for goods or services, you'll need to report the income on your tax return. The value of the cryptocurrency is based on its fair market value on the day you received it. If you hold on to the cryptocurrency and it increases in value, you'll need to report the capital gains when you eventually sell it. It's important to keep accurate records of your cryptocurrency transactions so you can report your income and capital gains correctly. This includes documenting the date and value of the cryptocurrency you received, as well as any expenses you incurred in acquiring or selling it. Number 3. Pay estimated taxes. If you're self-employed or have other sources of income besides your salary, you may need to pay estimated taxes throughout the year. This applies to cryptocurrency traders as well, as they're expected to pay taxes on their earnings on a quarterly basis. To calculate estimated tax payments, you'll need to estimate your total income for the year and calculate your tax liability based on that figure. If you're not sure how much to pay, you can use the IRS's Form 1040-ES to help you calculate your estimated tax payments. You'll also need to make sure you're making your payments on time, as failing to do so can result in penalties and interest charges. Number 2. Donate cryptocurrency to charity. Another way to pay taxes on your cryptocurrency earnings is to donate some of your digital assets to a qualified charity. When you donate cryptocurrency to a charity, you'll receive a tax deduction for the fair market value of the cryptocurrency at the time of the donation. This can help offset any capital gains you may have realized from selling other cryptocurrency assets. It's important to note that not all charities are set up to accept cryptocurrency donations, so you'll need to do some research to find a qualified organization that can accept your donation. You'll also need to make sure you receive a receipt from the charity for your donation, as this will be necessary for tax purposes. Number 1. Convert crypto to fiat currency and pay taxes. Finally, one of the most straightforward ways to pay taxes on your cryptocurrency earnings is to simply convert your digital assets into fiat currency and pay taxes on the resulting gains. This can be done through a cryptocurrency exchange or a peer-to-peer trading platform. Once you've sold your crypto for fiat currency, you'll need to report your gains on your tax return using Form 8949 and Schedule D. Keep in mind that you'll also need to report any losses you may have incurred, as these can be used to offset your gains and reduce your tax liability. Paying taxes on cryptocurrency earnings requires careful planning and record keeping. By understanding your tax obligations and exploring different payment options, you can ensure that you're compliant with the law and avoid any potential penalties or legal issues down the line. And with that being said, it's time to end our video. Subscribe to the channel for more amazing videos like this. We'll see you with another interesting video.